Taxpayers who have collected unemployment allowances this year should not expect the tax to be reduced again in the next filing season, according to financial experts. Unemployment allowances are usually treated as taxable income. However, congressmen have exempted some of the benefits they received in 2020 after the COVID-19 pandemic brought an unprecedented number of people to use the unemployment system. Those who continue to collect may not take similar breaks for 2021 benefits, and millions of people may remain on their tax hooks when filing their tax returns next year. According to the latest Ministry of Labor data, as of June 19, more than 14 million people had collected benefits. Janet Holtzblatt, a senior researcher at the Urban Brookings Tax Policy Center, said of tax incentives, this provision was born in the year of record unemployment. Fortunately, the economy is improving and actually reducing the chances of it expanding. Other articles on personal finance. Do you have a stimulus check yet? There is help available. The number of workers unemployed for more than a year will increase by 248,000. What to do if you intend to quit your job? The U.S. Rescue Program, signed by President Joe Biden in March, excluded up to $10,200 per person from unemployment benefits collected in 2020 from federal income tax. Only states with incomes less than $150,000 were eligible. Some states had their own tax deductions. According to a government spokeswoman, the IRS has not yet processed all tax returns and is subject to federal tax deductions, and the exact number of recipients is unknown. The Century Foundation estimates that about 40 million people raised unemployment aid last year. Without a partial federal tax cut, some would have received a larger or surprising bill in 2020. This is because the state that manages the unemployment allowance is supposed to give beneficiaries the option to withhold 10% of the allowance to cover some or all of their tax obligations. However, many underfunded unemployed people may have been unfamiliar with the unemployment system and did not choose to withhold. According to the Century Foundation, some states did not offer workers options for certain pandemic-era unemployment programs. As a result, the group predicted that less than 40% of last year's unemployment allowance was withheld. Last year, there were so many people who were unemployed for the first time in their lives, Holtzblatt said. They really caught up with this big surprise at the end of the year. Steps to perform. There are steps that a person receiving an unemployment allowance can take to prepare for potentially large invoices during the tax season in early 2022. For one thing, according to Century Foundation Senior Fellow Andrew Stetner, recipients should opt for a 10% withholding if they can afford it. According to the IRS, you can fill out a voluntary withholding invoice on Form W-4V and pay benefits to state agencies. If you can't afford it, at least keep in mind that you need to save for it when you get back to work, Stetner said. However, depending on your income and other factors, a 10% withholding rate may not be sufficient to cover your taxes. According to the IRS, recipients who appear to be underpaid or underpaid from their benefits can choose to pay the estimated quarterly tax. Families who are ready to receive a child tax credit prepayment, up to $300 per child per month, in July may also secure some of these funds, he said. I don't think it's a completed deal, Stetner said of the lack of another tax cut. People always have to be prepared for the worst-case scenarios, not the best-case ones. Don't expect another tax cut on unemployment benefits.